Your note goes through a bunch of various risks, regulatory risk, payment for order flow, market shares already high, COVID tailwinds reversing. It makes you wonder what could go right at this point.
Yeah, Carl, I think you're right. I mean, well, this company, first you have to give them credit. They went from 0 accounts in 2015 to 23 million accounts now. That's 10 times the size of Interactive Brokers, and it's gaining on Schwab, although their account sizes are small. But through those growing pains, which includes adding cryptocurrencies, which is tough, they're a pioneer there. They've also had some issues with disclosure around payment for order flow. And payment for order flow is the big one. This is what the SEC is looking at right now, and that's 70 to 80% of their revenues every quarter.
Yeah, we talked about that. Well, we talked about that when the stock was 65. I guess, is there any reason to think that the regulatory picture has worsened? And have they done anything to increase the moat relative to the Schwabs of the world, who clearly aren't standing still?
Yeah, no, you're right. So, you know, Robinhood was the pioneer of zero commissions on equities. That was their major selling point with the model, and everybody copied them. Everybody adopted this now. And so when you look at their capabilities and you look at Schwab, you look at Interactive Brokers and some of their competitors, the competitors offer more things now, but Robinhood's market's very different. Their target market is really 20 to 34-year-olds in the United States. It's individuals that are first-time investors. They have smaller account sizes, around 4,000, so it's different. And they're a stock trading app first, a mobile app application, but they've also added cryptocurrency trading, which they also offer for free. They're trying to improve their cryptocurrency offerings right now. They're trying to offer more coins and digital wallets. This could actually help accelerate growth. But, Carl, we actually have a lot of growth built into our model, although there's no way it can look like what it looked like the last 5 years, which we kind of call the perfect storm. And they benefited from the Department of Labor rule, from the COVID pandemic tailwinds, which are now starting to reverse.
Hey, Craig. Good morning. It's John. So the guy who started Shopify was originally trying to start a snowboard shop, and that was going well until it stopped snowing. So I wonder, when it comes to Robinhood, what happens if it stops snowing? Mainly, will its customer base remain loyal if the markets stop going up and away, if margin trading and options trading is not as available? How are we going to know?
So, I mean, listen, a lot of this depends on what the SEC decides with both brokers offering crypto and also they're investigating payment for order flow now, market structure. Adverse scenarios with both of those would be very bad for Robinhood. It's not what we're baking into our estimates or our target price. Was actually above the stock today, but they could have very adverse scenarios for the firm. Also, though, to your point, trading volatility and trading activity and retail engagement, it's going down. People are going back to work. The stock market's more stable and choppy. It's not going straight up anymore. And so we also think engagement will be slower. So what you're probably going to see here is very good growth, although slower than it's been. Average account sizes are also going to expand as their client gets a little wealthier. But what also is going to happen is trading activity is going to keep normalizing down, which is their major profit driver. Payment for order flow, which is really trading volume, is again 70 to 80% of their revenues.